Hello, I'm David Frazier, aka The Market Monk, and this is our daily Market Monk show where we strive to tell you everything that you need to know, but nothing more regarding factors and developments that are likely to affect your investment portfolio. So we begin today on Thursday, June 12th, the same way that we begin our show every day of the week, by discussing changes in the major stock market indices around the globe. Then I'll discuss important economic and geopolitical developments and only the important factors and developments. We don't talk about things that are likely to have little to no impact on your investment portfolio in our Market Monk show. So in regard to the major stock market indices for the United States, all of the major stock market indices for the U.S. Pulled back slightly for the second day in a row today, and the major European stock market indices also pulled back modestly again today. Meanwhile, the major stock market indices for China, India, and Brazil were essentially unchanged today, while Japan's Nikkei 225 index rose very slightly for the second day in a row. In regard to important economic announcements that were issued today, the U.S. Department of Commerce announced this morning that sales at retail stores in the United States rose during May in excess of 4% on a year-over-year basis for the third consecutive month. That's a darn fast rate of growth for retail sales. Now, those of you who listen to or watch the major broadcast financial TV shows, I'm sure you heard today that retail sales slowed during May. And they did slow just a bit, but they still rose on a year-over-year basis in excess of 4%. I'm sure you also didn't hear that number mentioned on any of the major financial broadcast shows today. Instead, those folks who report on these type of economic statistics, who, by the way, for the most part, have little training or background in finance, economics, or investment research, managing money, statistics. And instead, most of them tend to be have literature backgrounds or journalistic backgrounds. So, in my opinion, that's just one of many reasons why you shouldn't listen to most of those folks. Of course, there are always exceptions. There are always self-taught people, regardless of what their earlier background might have been. But anyway, back to what I was saying in regard to retail sales. I'm sure you heard journalists say today that retail sales rose only 0.3% during May, not 4%. And that is true if we are speaking of the change on a month-to-month basis. But even though I look at the change in hundreds of economic variables on a month-to-month basis, on a quarter-to-quarter basis, I pay most attention to the changes in those statistics on a year-over-year basis. And that's because there's always seasonality effects, and there's always numerous factors that can impact any given economic variable in any particular month as compared to the prior month. So I prefer to look at year-over-year changes. So it's true that retail sales rose only 0.3% during May as compared to the month of April. But if we compare the sales to the same month a year ago, they were up 4%, a little over 4%, I think. It might have been 4.1 or 4.2. I don't have the exact number in front of me. But that was the third month in a row that retail sales rose on a year-over-year basis in excess of 4%. So that's a very, very positive development. Even though that's a coincident economic indicator, it's not a leading indicator. It's illustrating that the U.S. economy is continuing to perform well on an overall relative basis during the past couple of months, or at least during the month of May. There was also an announcement out of Europe today. Just a moment, I'm looking at my notes, that showed that industrial production in the Eurozone rebounded pretty sharply during April. That's the latest month for which data is currently available, after falling during the prior month. So that's a positive development. Now that's it as far as important economic developments or economic statistics that were released today. You might hear these news commentators on the major broadcast shows talk about all kinds of other statistics, but I don't get into the ones that have shown to have little effect on where stocks are headed in the future. I only discuss the ones that are shown, that I have found over the past 25 plus years to be very, very important economic variables. Now, I'm going to get into discussing what was presented by the major financial shows today, as well as news medias in general, on some on a geopolitical development in Iraq in just a moment. But before doing so, let me go over the most recent readings on several short-term stock market trading statistics that I monitor on a regular basis. And those statistics are the advanced decline line for the New York Stock Exchange, which declined slightly for the third day in a row, while the Chicago Board Options Exchange Volatility Index, the VIX index, or what is often referred to as the fear index, rose considerably over the past 2 days, while the percentage of stocks that trade on the New York Stock Exchange that closed above their 200-day moving average declined for the second day in a row. Lastly, price momentum statistics for all of the world's, well, I shouldn't say all, for all of the world's major stock market indices. I'm talking about stock market indices for the United States, the Eurozone, Japan, Brazil, China, and India, closed today once again in pretty substantial overbought territory. So as I've been telling you for the second week in a row now, these short-term trading statistics began indicating about a week and a half ago that stock prices in general were due for a pullback. And that's what we're getting here. And in my opinion, this pullback is just what I said yesterday. If you watch or listen to yesterday's show, it's just it's the result of short-term traders who monitor the same type of short-term trading statistics that I do, taking some profits. That's all it is. There's no major changes in or no. There haven't been any releases of any economic statistics from around the world that are showing, that would show that the U.S. economy is going to slow and that stock prices here are going to pull back sharply. And that's true in most other regions of the world too. China is somewhat of an exception, but I'm not going to get into that today, especially since we discuss important economic developments in detail on every Tuesday. So now I'm going to mention briefly a geopolitical story that all of the major news outlets discussed today. And that is I call it a story because it has to do with an Islamic terrorist group in Iraq known as the Islamic State in Iraq and Syria. The Islamic State in Iraq and Syria, or more commonly is ISIS. ISIS. This is an Islamic terrorist group. Took control of another important city in Iraq today. Tikrit is the name of the city. I don't know if I'm pronouncing that correctly. And let me get some specifics on that, if you'll give me just a moment. This is a let's see, this Islamist terrorist group seized Tikrit today, a city that is 80 miles north of Baghdad, and it's the birthplace of Saddam Hussein and a power base of the once powerful Ba'ath Party. Like Mosul, another city in northern Iraq, and it's actually Mosul is the second largest city in Iraq. There are a lot of substantial oil fields in Tikrit. That's the third major city that this terrorist group is took control of since January of this year. In January, that terrorist group took control of Fallujah, which is approximately 45 miles west of Baghdad. And so what I think is occurring here in Iraq is something that I've been expecting, that I forecast during 2004 is something that I thought would happen once substantial numbers of U.S. troops had left Iraq and Afghanistan. And although most U.S. troops began leaving Iraq approximately 3 years ago, not until recently have major numbers of U.S. troops pulled out of Afghanistan. And so this comes to no surprise to me that a terrorist group is taking over cities there and is trying to impose very strict Islamic laws in Iraq. And in my opinion, there's going to, this is just the beginning of a civil war in Iraq. And I've been, I'm not surprised at all. And I have documentation to support what I'm saying, that I said approximately 10 years ago that once the U.S. pulled out of that region, that there was going to be a civil war. And that, therefore, one's got to ask, well, why did, what did the U.S. gain from ever attacking and being in Iraq? Well, I'm not going to get into that on this show because that's really more political, and I don't think it, at this point in time, has any direct relation to the financial markets. However, here's what we heard today from the major broadcast news shows. I'm going to look at my notes here and read these notes. These are quotes from these news show. Quote number one: Iraq and economy rattles stocks. Iraq and economy rattles stocks. Rattles stocks. Both the Dow Jones Industrial Average and the S&P 500 index were down a mere 0.7% today. Extremely small pullback in the U.S. major stock market indices. But according to this news show, Iraq and economy rattled stocks. The Iraq is what I was just talking about, this terrorist group, and the economy was referring to the supposed big slowdown in retail sales, which we did not get. A second headline read, "Stocks under siege." Don't you just love that? Stocks under siege. And the third headline, or quote, was, "Has the tone of the market changed dramatically because of these developments?" Has the tone of the market changed dramatically because of these developments? That was a question that was posed. And the answer to that question is no, it hasn't. So why do these news shows say things like this? It's very, very simple. And that is, my experience has shown that most of the folks that report the news on these shows either don't know what they're talking about, or they don't care about trying to help you, that is, financial market participants, in improving your investment results. Rather, they just want to get you to watch their shows because they make a lot of money off these shows by selling advertisements. And they know that if they can come out with a headline or a quote or a story that can affect you in an emotional way, you're probably going to pay attention to that show. That's not how you make money in financial markets. I watch these news shows every day of the week for probably about an hour a day for one and only one reason. and that is to get a good grasp on the perceived world, the perceptions that these folks that put on these shows are trying to put out. I don't ever watch any of these shows to try to get any factual information. Now, there are exceptions to what are discussed on some of these shows, and there aren't many, but two that come to mind is CNBC's Jim Cramer, who, I think, and I think he's very sincere in wanting to educate financial market participants and help financial market participants become better investors and traders and make better decisions. The second example is Fox Business News' Charles Payne, who, in my opinion, does a really good job and has a lot of integrity. And those persons are worth listening to. But for the most part, the folks on these shows are not worth listening to. Now, I know we're getting long here already, and I haven't even gotten into tonight's show. So I guess I'm going to have to keep the subject or the main topic of our Thursday night show rather short tonight. But I'd like to at least get into it. And beginning today, Thursday, June 12th, on every Thursday, the focus of our show is going to be topics and subjects that hopefully will help you to become a better speculator, trader, and investor. So what I'm going to do today is, if you're not already at my internet website, I suggest that you go there, and that is at www.themarketmonk.com. And what we're going to look at today, what I'm going to discuss, if you see, once you get to the site, let's slow down a bit here, because some of you might not be at the site. There's a gold-colored menu bar near the top of the screen, and I'd like you to put your mouse over market timing. Now, those of you that are subscribers to our newsletters are probably already familiar with these market timing statistics and charts that I'm going to go over this evening. But it still doesn't hurt to go back and review, even those of you that are familiar with those charts. And the reason I'm starting here is because I'm a top-down analyst. I make my investment decisions, my personal decisions, trading decisions, speculation decisions, and long-term investment decisions, as well as my recommendations to others based on a top-down approach, meaning first I look at economic and geopolitical factors and developments from around the world. I then, after reviewing and analyzing hundreds of economic statistics every few months, and about 100 every month, then I have a pretty good idea of where the macroeconomic environment is headed. So after getting a good understanding of where the macroeconomic environment is probably headed during the months ahead, is most likely headed, based on my experience in analyzing a lot of these variables for many years now, then I will get into looking at certain sectors of any given economy, certain economic sectors, which I'll give you an idea what I'm talking about in just a moment. And then once I get a good idea about which sector, not only my experience shows is likely, most likely, or is likely to perform best in a given macroeconomic environment, I like to verify that those sectors are performing in the way that I expect them to, that they have historically performed during different phases of a given economic of an economic cycle. And then once I have a good understanding of the overall big picture, and then the overall big picture, and then sectors and industries that are likely to perform best in any given macroeconomic environment, then I get into reviewing. Really, I try to look at every stock that composes a given sector. And we'll get more into this in future weeks. I don't want to give you too much at one time, but once I then get into the stocks, I analyze their underlying companies, on a fundamental basis, and then I look at for recent trading. Lots of other things that I look at. I look at a lot of different variables to make my investment, speculation, and trading decisions. And it's not that you necessarily have to do that, but in fact, I guess I can do a lot of that for you if you choose to subscribe to one of our financial market newsletters. And just real quickly on that, if you're looking at this gold-colored bar, once again, menu bar, and look over to the right, you'll see a menu item entitled Financial Newsletters. If you click on that, you can read about our different newsletters, and you can subscribe on a completely 100% free basis for a period of 2 months just by giving us your name and email address. Enough about that. So tonight we're going to review briefly these market timing statistics and look at them in chart form. So if you hopefully you're still at our website and you're looking at this gold-colored menu bar, and if you put your mouse over market timing, you'll see buy-sell index. If you click on that, you'll then see our buy-sell index. It's really my buy-sell index that's based on an economic stock market forecasting model that I created and developed initially during 1986 and have then developed further over a few years after that, and have used this model for many years. And if you look at this chart, you'll see that this model in general has been very good at forecasting major turning points in the U.S. stock market. The B stands for buy, meaning that our model was given a buy signal, meaning that our model was indicating that it was a good time to get into stocks. And an S is for sell, meaning that our model was indicating it was a smart time to get out of stocks. I'll get back into the details on this on future shows. I just want to cover some items real closely tonight. Secondly, if you go back up to market timing and click on sector performance, you'll see a chart of how the 10 major economic sectors in the United States, or stocks of companies, I guess I should say, that operate in those 10 different sectors performed in comparison to one another over the most recent 6 weeks. Thirdly, if you go back up and click on relative strength index, there's a chart of another model that I developed many years ago. And lastly, under market timing, there's a chart for our overbought, oversold indicator. Now, because this show has already gotten quite lengthy, I just want to bring you your attention to this section of our website, or these pages of our website, and some things that are available at our site. I'm not trying to sell you anything here. All of this information that I'm going over at our website, it's free to anyone. We do charge for our financial market newsletters, but I don't charge for any of this information. And something else that I'll mention tonight is, if you'll look once again at the gold-colored menu bar and take your eyes over a little bit to the right, where you'll see geopolitical, and you'll see the 2014 Iraq Civil War. And this is something that I started gathering information on today, June 12th. In the past, you'll see that under that same menu item, there's a drop-down menu for the Russia-Ukraine crisis, when a lot of developments of concerns were occurring there, and that it is in Iraq from around the beginning of this year, or towards the end of last year, through May of this year. And not really much is going on there now, so I think the Iraqi situation is more important. I think I've said enough for one show. I don't want to get too long-winded here. This show on Thursday nights is a show that I'll try to help you become better traders, speculators, and investors. And you might be thinking, well, you didn't help me at all tonight, but I want you to think about that for a moment. We want to start off slow here. We want to go from a very top-down approach. And so I'm showing you these market timing charts, and I'll get more in detail regarding the information that is illustrated in those charts on next Thursday's show. And this is going to there's a lot to talk about. I can't help you become a better investor, speculator, and trader in just one night. I mean, this is going to take some time, but if you tune into this show every Thursday night, there's no doubt in my mind whatsoever that the vast majority of you will get something out of this show that will help you to become a better investor, speculator, and or trader. So I thank you for watching and for listening and watching, and I'll speak with you again tomorrow.